Hey everyone, welcome back to We Love Small Business, and today we're going to talk about the current state of the real estate market in Canada and how it's affecting short-term accommodation businesses run through applications like AirBNB and related kinds of applications. And it's no secret that the real estate market has been booming lately, and with everyone from Canadians to foreign investors buying up properties left and right. And with the rise of short-term rentals, people have been raking in the cash like a gardener with a leaf blower. But now it seems like the good times are ending faster than a kid with a free sample tray at Costco. So with so many properties being bought up and turned into short-term rentals, there's less and less housing available for people who actually need it. And this is why governments in Canada at multiple levels have been trying to curb this crisis with things like the federal government's new underused housing tax, and up there's a link to a video that I did on this subject, as well as the short-term accommodation bans that are starting to pop up throughout the country at more localized levels. And there's a bit of a powder keg that's backing some real estate entrepreneurs in jurisdictions throughout Canada into a corner. And I want to make sure that people are aware of the rules before they make any rash decisions, or maybe help them along with some decisions before their local governments stick their noses into this stuff with their own brand of legislation. So before I get into that, let me give you a brief rundown, or really a refresher on when you're required to register for GST if you're in this accommodation game. And the general rule is that if your revenue from all sources, including that of any associated persons or companies you own, is equal to or less than $30,000 over the last 4 consecutive calendar quarters, then you are considered a small supplier and you're exempt and you're not required to register. However, you may still choose to register voluntarily, and there are valid reasons to do so, which you should discuss with your accountant. If you have another company that you control that's selling taxable goods and services, their revenue is also included in that $30,000 threshold. So if it exceeds $30,000 in revenue, you must register for the HST GST and begin charging HST GST on your short-term accommodation. And any personal side hustles or businesses you may have must also register if they're associated with your company. Now, short-term accommodations are considered taxable supplies that require you to apply the GST rate to the sales price if you're a registrant. And this rate will generally be the rate applicable to the province that you're in. And as a registrant, you're also entitled to a rebate on the HST that you pay on expenditures related to the taxable supplies. Now, back to that powder keg I've been talking about. If you own a property that you're using to sell short-term accommodations and you were required to be registered for HST under the Excise Tax Act, you may end up in a bit of a rock and a hard place. You see, there's a trend I'm starting to see across Canada amongst more localized governments where they are starting to ban short-term rental accommodations in certain jurisdictions throughout the country for certain types of properties within residential zones where the owner doesn't occupy the property. And this can be a huge problem for people who own and run an Airbnb-like accommodation that they don't live in, as their only real option to generate income from the property is to get into a long-term tenant situation. Now, to help you understand why this response is putting entrepreneurs in a tough spot, you need to understand the change in use rules. The change in use rules require you to pay the equivalent of the GST multiplied by the current fair market value of your property if you switch from a taxable service of short-term accommodation to the exempt service of long-term rentals. So if you're thinking about changing your short-term rental to a long-term rental, you need to be prepared to pay a hefty amount of money in GST to the federal government. So looks like the days of easy money from short-term rentals are going to be a little harder, or a lot harder. And with the housing crisis in Canada and the government's efforts to deal with it, there's more and more restrictions being placed on short-term accommodation businesses like Airbnb. And if you're currently running an Airbnb or you're considering getting into this business, do your homework and know the rules for the jurisdictions you choose to operate in and make good decisions. And also understand that these kinds of responses are becoming the trend amongst local governments, so the rules today can change very quickly. So be aware of the potential pitfalls and costs involved. Talk to your accountant. Always talk to your accountant. In business, your accountant is like Mary Poppins, practically perfect in every way. So thanks for tuning in, and if you enjoyed this, a like and a comment will go a long way to help grow this channel and get more free content like this out to small business owners. And make sure you're subscribed and notified, and we'll see you real soon.